Hello viewers and welcome to the next episode of the UAE Corporate Tax podcast series. In the previous episodes, we were discussing about the TP guidelines in the UAE corporate tax. One of which was Article 35 that talks about the definition of related parties and control. So Article 35 is the most important definition as it sits at the core of the transfer pricing space. Reason for this is that the transfer pricing guidelines apply on the transaction between related parties. So essentially, the definition of related party has been divided into three relationships. First, covers the relationship between two or more natural persons. Second, covers the relationship between a natural person and a juridical person. Third, covers the relationship between two or more juridical persons. So let's dig deeper into these relationships. So, two or more natural persons are considered to be related parties up till the fourth degree of kinship. For instance, this includes a person's parents, children, grandparents, grandchildren, uncle and aunts, great-grandparents and great-grandchildren, also great-great-grandparents and great-great-grandchildren. However, more clarification is awaited from the ministry on this. Secondly, a natural person and a juridical person is considered a related party if natural person alone or along with its one or more related parties directly indirectly owns at least 50% of the shareholding of a juridical person, or they control the juridical person. So finally, two or more juridical persons are considered related parties in three circumstances. If first being that a juridical person directly indirectly along with its related parties or alone controls the other juridical person, or owns at least 50% of the share capital of the other juridical person. And third is that if any person directly indirectly along with its related parties or alone owns at least 50% of the share capital of both the juridical persons or control both the juridical persons. Additionally, the following are also considered to be related parties. First is a permanent establishment, be it local or foreign. Second are the partners of an unconstituted partnership. Third is a trustee, settler, founder, beneficiary of a trust or a foundation. Now let us see how control has been defined. So generally, control is the ability of a person to influence the other person. However, Article 35 defines a few specific circumstances where control can be established. So if a person has the ability to control at least 50% of the voting rights of the other person. Second, if the person controls at least 50% of the constitution of the board of directors. And third, if a person has significant influence over the business affairs of the other person. Thank you for tuning in this session, and let us look forward to other sessions on UAE corporate tax, and I hope we are adding value and this session was informative for you.